Penchant for gold ETFs has pushed the trade deficit to a record high of just under $35 billion in January. The value of gold imports almost tripled compared to last month. Latha Venkatesh is here with more on the widening trade deficit. Latha?
Yeah, this is some kind of an all-time high in terms of a monthly trade deficit, coming in at $34.68 billion. We normally do around $20 billion to $25 billion. The rise is because imports have jumped a lot. The January imports have come in at $71.24 billion, good 12% higher than what it was in December, which was around the normal average of $63.5 billion. Exports, meanwhile, have done a little worse. Remember, that is the month of 50% US tariffs. So it is $36 billion versus $38 billion that we did in December. And the biggest culprit for the higher imports is gold. Gold imports rising to $12 billion, again some kind of a monthly record, compared to only $4 billion in December. The January gold imports being higher was something people would have smelt, because last week the Association of Mutual Funds of India announced that India saw a record rise in gold ETFs. Investors were putting as much into gold ETFs as they had put in equities. That was one of the details that came out from the AMFI data. It was about 24,000 crore rupees that had been invested in gold ETFs, and exchange traded funds or gold ETFs have to be backed by physical gold, and that may have led to the record gold imports of nearly $12 billion in January, leading to the higher trade deficit.
All right, Latha, many thanks for taking us through those details. Now, Indian trade negotiations